Hello. Today I want to talk to you about two things. One is how to close a company, and the second thing is your upcoming exam. Now, I'm not going to ask you to close your companies, but I want to show you how to do it so that you'll know. I mean, part of what we're doing is learning how to do Peachtree. So, closing a company is an important part of an accounting process. We close a company at the end of the accounting cycle in order to have the temporary accounts, which are revenue and expenses, close out to retained earnings. And then the cycle starts again. So the temporary accounts are those accounts that are in the income statement. And that's what we have here. This is our income statement. This is basically the Peachtree company that you had at the end of December. The numbers might be a little different, but they're basically the same. So there's revenue, expenses, etc. Net income of $198,000, and these will all be closed out to retained earnings. Here's our balance sheet for that period of time. Look familiar? Basically, the numbers are the same. So after we close our company, you'll see that everything that's on this income statement will be zero. Everything that's on the balance sheet will be essentially the same, except that retained earnings will have been increased by the amount of our income that's closed out to it. Okay, so let's get started. Close this, close this. And, okay, now to close a company, we go to Tasks, System, Year-End Wizard. Now, again, I'm not going to ask you to do this, but you need to know how to do it. Most of what you do in closing is pretty much the default choices. So this is telling you what the current open years are, what's going to be closed, payroll tax years, etc. Go to next, and we want to know what years to close, payroll, fiscal and payroll tax years, and then we want to know, do we want to print any of these reports? We don't want to print the reports. Go to next. Do we want to do an internal accounting review? If this were a real company, you probably would, because closing is a essential part, and you want to make sure that everything is okay. But we're not going to do that. So we go to next. Now you notice that next is now grayed out because you need to back the company up. And we need to back the company up because anything could happen during a close. And if something bad did happen, then you'd want to have your file backed up so you can go back and retrieve it. So we want to back up our company. So we know how to back up. So I'll show you how to do that. Back up. And we know we want to put it someplace that we can find it, like the desktop. Okay, so there's our company, there's the name, and we want to save that to the desktop. And then it's telling you how much space it's going to take. Say OK. And the company is now backed up, and you notice now that next is now available. So Peachtree is satisfied that we've backed up. Go to next. And this is telling us what's open and what's going to display. We go to next. And then this is telling us what's going to happen after we close, what's going to be open. Now you notice January 2017 is going to be open, and 2018, because we're closing 2016. Go to next. Now we begin the close year process. Now, this is not going to take any time at all, or it shouldn't, with our company because we have very little information in it. But with a real company, this could take a lot of time, a lot of data in it. So, but ours should run with no problem at all. We don't want need to run a data verification, even though it's recommended. Just for, again, a real company, we probably would. So we begin our close, and congratulations, we are closed. So click on finish. You notice two things. One is we are now in period 117. So we are now in January, and we want to look at our financial statements. So we go to financial statements, we look at the balance sheet. Notice that the balance sheet is basically the same as it was before, but you notice also that retained earnings now has increased by the amount of the net income, or in our case, a loss that was closed out to it. And that's our balance sheet. Move this. And now if we go to our income statement, click that, and zero. It's zero. This is January 1st. Everything is zeroed out, and we are now moving forward. So, again, I'm not asking you to close. This is what a closed company looks like. And the company that you'll be using for your final exam will be this company, this closed company, right? I will make the file available to you. You are not asked to close. Now let's just talk about what this final exam will have on it. Let's get rid of this. Okay, so you're in January, and you're going to be asked to do several things. One is you're going to be asked to set up GL accounts. How do we do that? We go to Maintain, Chart of Accounts, and we set the account up. Now, we've never done this, so I'm going to show you how to do it. The important parts of this are, of course, shown with the asterisk, and it's account ID. So I'm going to show you how to do a demo of one of the accounts that you're going to be asked to set up. Okay, so the account, I'm giving you the account number. Okay, 40500, and I'm giving you the description. It's sales army shoes. Now the most important thing is the type of account it is, because Peachtree says if you don't change this, I will put it where I have it here. So this is an inventory account, an income account rather, excuse me, and that's where it belongs. But Peachtree says I have it in cash, and that's where I'll put it. So it's up to you to change this. So you need to change it to an income account. Income. You'll be told all of this in the exam, all right? And then you're asked to save it, and we'll save this. And there's two other accounts just like this, but this is the one. This is one of the accounts that you're asked to set up. Okay, so that's how to set up an account. Then we're asked to set up vendors. We know how to set up a vendor, but let's just go through it. Maintain vendors, and I'll give you the vendor ID, the vendor name, and the expense account. The expense account is over here. You have those things, all right? So that's that. Then I'm going to ask you to set up a customer, and we know how to do that. Go to Maintain, Customers, and you have the customer ID, the name of the customer, and the GL sales account, and that's back here in sales info. Okay, so that's that. Then I'm going to ask you to set up an inventory item. Okay, now we only did this one time. Well, we set up 3 inventory items and we haven't done it in a while. So this is the way we set up this inventory item. Maintain inventory items. And then we need the item ID. So this will be the inventory items that I'm asking you to set up. Inventory items is AB. Sorry for the background noise. They're constructing something in my next door apartment. The description is Army boots. Item class is stock item. Price level is 100. Last unit cost was 40. Make sure that that's what you're typing in. The GL sales account, GL inventory account, GL cost of sales, those need to be set up here. The first one, the GL sales account, that's the one we just set up that I showed you how to set up. So when you open this window, you will find that account. Sales Army shoes, that's the one we just set up. And the other 2 will be the other 2 that you're setting up. Okay, men's shoes, Army shoes, and cost of sales for Army shoes. So this is how we set this inventory item up. Okay. Yeah, we'll save it. Okay. And then from this point on, we go through what we've done 1,000 times before. Well, maybe not 1,000 times, but before. We're going to purchase shoes. Remember when we purchase, we go to task, purchase, receive inventory, and we need to put in the vendor, and the vendor's not there because we didn't set that vendor up, but you need to put the vendor in, you need to put the quantity in, you need to put the item in, you need to put, and everything else will fall in because of what we've set up already. Let's see, here's the Army boots. Okay, and if I ask for 100 of them, you need to put the quantity, item, and everything will then fall into place. Okay, so that's the purchase. And then we're going to sell these shoes. And I don't want to save that. We're going to sell these shoes. We know how to sell. We go to tasks, sales, and again, we need to put a customer in, we need to put the quantity in, we need to put the item in, you need to make sure you put invoice numbers in, etc. All of those things. Okay, we know how to do this. Then we're going to accrue expenses. We have rental expense, the same thing that we've done before. How do we accrue? How do we accrue expenses? Task, purchase, receive inventory, accruing expenses. So we accrue certain expenses, rent and utilities, telephone, etc. Then we receive payments. Make sure, a lot of you are doing crazy things with payments. Payments happen in receive money And we know that we want to use the regular checking account, and we know that we need to bring the customer up. Well, I don't have any customers in this, but you will have customers. You need to bring the customers up, and the bill will show up here. You can't write in here an amount to pay. You have to have a bill to receive money from. You have to have a bill. So the bill will show up here when you pull the customer up that owes you the money. Okay? What you've done before. Then you're going to pay bills. So again, that's in tasks, bills, pay bills. Again, you're asked switch account. Say OK. And same thing as with receiving money, you need to bring up who you owe the money to, the vendor. Make sure you put check references in, check reference numbers, etc. The bill will show up here. You pay the bill, etc. You've done it before. Then you're going to write a check for salaries and wages. How do we do that? Tasks, bills, again, pay bills. We're going to use the regular checking account, and we're going to fill in the amount here. We know that we can put as many lines in as we need. This is for salaries and wages, and we write the name in here. The name, we don't have a vendor, so we write the name in there. Then we're going to pay the 5th installment on the loan payable. We know how to do that. Again, we're writing that to Citibank. We have a check number, and we know how to distribute it. It's between interest expense, loan payable, or note payable, as the case may be. Okay, you need to put a GL account in there, and make sure you put the GL account in. Okay, so this is something that you've done before. And the last thing you're going to be asked to do is something that you've never done before, but we've talked about it, and you're going to be asked to sell the assets that we have. Okay, now what assets do we have? Well, if we go to reports and forms, and we go to our financial statements and look at the balance sheet, what assets do we have? Okay, the assets that we have are these. These are our assets. These are our assets. And I'm telling you that we're going to sell all of these assets for this amount, for the book value. The book value. This is the book value. All right? When you are done selling this, this should all be zero. There should be nothing left. We talked about selling assets. Talked about assets, selling assets in the spreadsheet. This should all be zero. Okay? So then we have check digits when it's done. You have to import the financial statements to Excel, and then send them to me, and we're done, and we're out. Okay? Thank you so much for your time and attention.